Hello, commerce students. Today I came up with a new topic called as basic accounting terminology. So before jumping into the other concepts of accounting, so in the previous video I gave intro of what is business and bookkeeping and accounting. And next, it's a basic need for all the commerce students to learn the actual meaning of the terms we are going to use in coming classes. Or if you want to do any problems or if you want to understand any definitions, these are the common terms which gets repeated in everything. So I came up with only a few nine terminologies. Let's understand this because these nine are the mandatory things you need to learn here. First one is capital. If you are starting any business, we need compulsorily some basic amount for that, for investment. So capital is the amount which you have invested to run the business, or else it is the amount invested by owners to run the business. Any amount, it might be 10 rupees or 20 or 100, anything to run the business. If any amount is invested by owners, that amount is called as capital. And the other terminology is transaction. Suppose between two parties, between two persons, if money get exchanged or goods or any service, if these type of things got exchanged between two parties, it is called as transaction. So I can say, if any exchange of money or goods or service between two persons or parties, that exchange of activity is called as transaction. Next, creditor. Creditor means it indicates a person. Creditor or debtor, both. It indicates a person. Especially, creditor means he is a person who gives money. Person who gives money, and he is the person to whom money is payable, because in past you might took amount from him, and what you are liable here, you need to pay money to him on the due date. Creditor is the person who gives money, gives money at certain interest rate. So that is why if you are taking amount from the creditor, you need to pay amount to him. And next, debtor means he is also a person who is responsible. He is responsible to pay amount. A person responsible to pay amount to the creditor. So let's take an example here. A transaction happened between these two persons, debtor and creditor. What transaction happened here? There is an exchange of money. There is an exchange of money happened. Creditor gave his money to debtor on interest basis. Here, creditor is the person who gave money, and the person who received money is called as debtor. That is why I wrote here it as creditor is a person to whom money is payable, and debtor is a person responsible to pay amount to the creditor. And this exchange of money happened, and it is called as transaction. Next, the other term is liability. Liability is, it is the responsible. If you observe the previous transaction of exchange of money, liability means it is the responsible of amount payable or on due date. We can say it is a due amount, amount payable, or debt amount which needs to be paid. That is called as liability. It is your responsibility to pay the due amount or debt amount. Next, goods. Goods are the main product of your business which are for selling purpose. If you observe any transactions in the business, we may purchase goods for the purpose of business or for supporting the business also. So only the main product of business which is for selling purpose need to be identified as goods, and the other products which are used to support the business should be used with their actual name only, but not to be used as goods. So specifically it should be for selling purpose only. And next, drawings. Drawings, it is the amount or goods withdrawn by owners. Withdrawn by owner. See, in first case, in first terminology, capital, we said that it is the amount invested by owner. If the same amount is disinvested by owner, that is called as drawings. Next, voucher or bill. So it is a documentary evidence. voucher or bill, both are same. It is a paper which is, we can say it is a documentary evidence. It's what it do, it supports the transactions, it supports the transaction. In business, if any transaction happened between two parties, compulsorily some documentary evidence should be there, and the same should be saved for future purpose. And next, asset. Asset means any material which supports the business activity, and it should have some value when it is resold. That is called as asset. So any material which supports the business activity, and when sold it should have some resale value as well. Let's take an example here. Machinery or building. So if you are purchasing machinery, it is a material. With machinery you are able to manufacture goods, and if you take building, with building you are able to store your machinery products and everything, whatever the activity you are doing, all that will be done under the building only. So that is why we can call them as asset. Even if you sell these, any of this, we will get some amount for that at the current market price. So these are the basic terminology you need to learn before doing any problem or before learning any accounting concepts. Hope this is clear to you. Thank you. Let's catch in another video.